Dear Mr. Weber, dear Mr. Rona, dear speakers, ladies and gentlemen, first I can really tell you I won't say something about Eastern German cities. As Dörte Höppner said, it's always a little bit tricky, but from my point of view, Halle is of course a key city in Eastern Germany, and so I would say nothing else. Well, thank you very much for inviting me today to your very impressive conference. And of course, I'm delighted to share with you some closing remarks on this excellent conference. Today's topic has to be seen within the framework, of course, of the Capital Markets Union, a long-term project which will certainly accompany us in the upcoming years. And I agree that we should not underestimate the international dimension and the importance of enhancing Europe's attractiveness for international investors. The Capital Markets Union will play a crucial role here. In the course of the morning, we already followed very interesting discussions on this, and we were presented with an economic, regulatory, as well as an investor's perspective. And I take this opportunity to also add some observations from the European Parliament's side. Let me start with a few words to the Capital Markets Union in general. It is certainly one of the most important elements of the investment plan of European Commission President Jean-Claude Juncker. And the overarching aim is to open up opportunities to strengthen the European Union as an attractive place for investments and to enhance Europe's competitiveness. In fact, our European capital markets still lack a true European dimension. And I would like to share with you an interesting figure. Between 2008 and 2013, we would have had an additional 90 billion euro in order to finance enterprises and innovations if our risk capital markets had been as advanced as in the United States. A look at the United States might be helpful, but we should avoid duplicating structures which do not fit our system and might be out of place in Europe. What we need is a strong and ambitious integrated European approach, which we can only achieve step by step. I think that the European Commission's plan, the European Commission's action plan, serves here as a valuable starting point. And as I already mentioned in the beginning, I see the Capital Markets Union as a long-term project that will involve a whole package of measures and initiatives. Against this background, it is of utmost importance that we build a key project such as the Capital Markets Union on a solid foundation of financial services regulation. And this is where my report comes in. You may know that I have been the rapporteur in the European Parliament for an own initiative report with a memorable title. I won't tell you the title now because it's quite long. But of course, it dealt with the stock-taking challenges of the EU financial services regulation. And this report is, from my perspective, a first step to take stock of the legislative work we have done in the past years since the outbreak of the financial crisis in 2008-2009. The comprehensive regulatory agenda was certainly necessary in order to restore the financial stability, to strengthen customer protection and to implement the lessons learned from the crisis. However, since then, neither the impact of the individual legislative measures and their interactions have been sufficiently analyzed, nor the accumulated impact of the overall legislation. Thus, the report reiterates an old demand from the Economic and Monetary Affairs Committee in the Parliament that the legislation has to be evaluated, not only ex ante, but also ex post. We will need a comprehensive overview of all financial services sectors with an assessment that analyzes the accumulated impact where possible. And we ask the European Commission to provide us with such an impact assessment by the end of this year. Well, there were some other demands saying we could do this within the next 10 years, but I was not so much in favor of that. 2016 is the right year to do this. And as the Commission already started, Martin figured that out, the consultation on the effects of the financial services legislation within this framework of the action plan, I'm confident that we will start discussions soon when we have then the analysis of the European Commission. One point to mention also, on this we will have certainly high expectation from the Parliament's side, so we're very much looking forward for the analysis of the Commission. Then only on the basis of financial services regulation that works effectively and efficiently, key projects such as the Capital Markets Union can achieve the best results. The accumulated impact assessment as well as obligatory consistency and proportionality checks on a regular basis should ensure that the application of the financial services legislation is less complex, understandable for the better aligned to the needs of consumers, investors, and, of course, businesses. And with respect to the aims of the Capital Market Union, it should also be assessed how the present financial services legislation interacts with the possibilities of the financial services actors to benefit the real economy and to foster investment. This should include a thorough evaluation how the current regulation fits for investors, be it the retail investors or, of course, the professional investors. And without doubt, we do need more investments in the European Union. The mobilization of private capital will be decisive. The study which was presented here today rightly points out that the Capital Markets Union should likewise increase the European Union's attractiveness for international investors. I see huge potential here, especially when having a look at the 3 case studies. To one of them I will come back shortly, but first let me say that from my point of view, I agree with that obstacles remain, and I appreciate the policy recommendations which are presented from a Swiss perspective. One topic of the study which I consider of particular importance and which you also will find in my report is the role of the SME and especially the SME funding. Capital markets financing alone will not succeed in providing sufficient capital and appropriate financing solutions for small and medium enterprises.